Let's take a look at your market news now. Asian markets sank on Monday following reports that US President Donald Trump is planning to hit China with another round of tariffs, dealing a blow to hopes for talks between the two economic giants. Traders sent regional equity surging last week as it emerged that Treasury Secretary Steve Mnuchin had offered to meet officials from Beijing to avert an all-out trade war. However, the Washington Post and Wall Street Journal said the president had decided to impose 10% levies on $200 billion of Chinese imports and could make an announcement in the coming days. Hong Kong's Hang Seng fell off over 1.3% to 26,923, while the Shanghai Composite Index also dropped 1.1% to 2,651. Tokyo was closed today for public holiday, with the Nikkei not trading. US stocks ended little changed last Friday as financials gained with bond yields, while news that President Donald Trump instructed aides to proceed with tariffs on about $200 billion more of Chinese products limited gains. The Dow Jones Industrial Average was marginally up, with the S&P 500 also inching higher up to 2,904, while the Nasdaq Composite Index tipped lower. For more on the markets, we cross to Arabile Gomede. He's at the Johannesburg Stock Exchange. Good afternoon, Arabile. Our rand not doing too well.
Certainly isn't. Just above that 15 rand mark, trading there or thereabouts, with a just below or just above. It's still a really deep mark. They're over 0.5% in weak territory for the South African currency. At the same time, the JSE All Share is over 600 points down as well today. That's just around 1% or so as well. Negative impetus coming through from Asia, the same coming through from the United States late last week as well. How that will fare later on today is going to be of keen interest. That trade story is going to be quite interesting. But let's unpack the rest of the European and local markets. Here joining me now as we unpack that rand mark is Viv Govender from Rand Swiss. Viv, thank you so much for the time. I suppose 14.96. What do you make of this rand? I mean, one would have hoped, having hit 14.61, that it was about to rally even higher, but clearly the weakness still seeping through.
And surprising as well. I mean, remember, before the entire Turkey situation, a couple of days before, we were around about 13.30. And then we had Turkey, we had Argentina, then we had the recession. All those factors came into play at the same, around about the same time, and that gave us, you know, this continuous ratcheting up in terms of weakness of the currency. And I'm surprised that once some of this stuff has turned away, for instance, the Turkish situation has calmed down because the central bank has stepped in and kind of almost overruled Erdogan, even though that's not quite the truth. And we still haven't seen that improvement. I mean, I would expect us to be in the lower 14s, not the high 14s like we are.
Yeah. At the same time, you've got an emerging market story, right? So it's not just South Africa suffering. Argentina's peso is struggling, and obviously interest rates there at around 60% or so. You've got Turkey's one that we spoke about, 24% or so as well. Brazil's currency is also struggling. The Russian ruble also doing the same. It's pretty much just an emerging market collapse at present.
Yes, it is. And I mean, the Brazilian thing, we didn't even talk about the fact that the front runner in the presidential election was stabbed. You know, I mean, that's amazing. Imagine if, like Jacob Zuma was stabbed or Proma Poza was stabbed just before the election. Yeah. That's just happened in Brazil. So yes, and the stuff with Russia as well. I mean, and in India, it was. I mean, it's across the emerging markets that the currencies are weakened. But among the weaker currencies, except for, of course, like we talked about the Turkeys and the Argentinas, we're among the weakest of those weakening emerging currencies. You know what I mean?
Why? One would think that we'd be perhaps a better proxy than all of those. We certainly don't have stabbings. Our interest rates are not as high. We have a more stable financial market. Why are we still weakening so much?
I think the recession is bigger than we think. I mean, India has obviously issues, but they're growing at 7%. You know, other countries have issues, but they're growing at multiples of what we are growing. In South Africa, we removed Jacob Zuma, of course, as everyone knows, but we haven't actually had the uptick in any kind of confidence in inflation and growth numbers as we had hoped at the start of the year. At the start of the year, people were talking about 2% growth rates and maybe above 2% next year. Now we're not hitting 1% for 2018. So that's a very disappointing figure that we are seeing. And we're seeing those kind of numbers going through in terms of consumer confidence, in business confidence, PMI figures, all coming to us quite negative.
Yeah. How do we get out of this mire? Is it our situation that, of course, we know the growth story, right? We need to fix that. But is it a case of waiting and seeing what the rest of the world does in order for us to begin to pick up beyond that mark?
No, because the problem is that when the rest of the world is growing quite nicely, we were not. And we can't expect the rest of the world to keep on growing quite nicely while we basically recover and kind of catch up. We've got to have our own path. And unfortunately, the issue in South Africa, I mean, we were just talking about this before we were going on air. Growth in South Africa was not hampered as much by corruption as it was by incompetence. And the fact of the matter is, you look at other countries in the world, places like Russia, places like Brazil, corruption there as well. Growth rates were spectacular compared to South Africa. And we in South Africa don't just need to avoid corruption, we need to basically get excellence in government, excellence in economic policy, which we don't have at the moment.
Yeah. If we talk about stability, we have CPI coming out on Wednesday, and hopefully the message is heeded. Do you see that figure? Because the fears now is that figure is beginning to pick up a little bit of steam. Does that set the mark then for the Reserve Bank to say, perhaps we need to start cautioning on the side of perhaps increasing interest rates sometime?
Look, I mean, it's a circular cycle. I mean, to repeat it myself, basically, weaker currency, more inflation, and then you have to do something with the interest rates. You cut the interest, you basically raise interest rates, you're going to make the country look a bit stronger. A stronger currency also fights inflation, makes less reason for raising interest rates as well. So probably we're going to have to raise interest rates, if not this time around, which is unlikely, but maybe next time around, or probably by early 2019.
But one would fear that would then hamper growth.
Look, at the moment, I think the bigger danger is actually inflation, really coming into play. The weaker currency really, cycling out into like 16 or whatever, if we don't do something about it. So we've seen, for instance, places like Turkey doing 4% interest rate hikes. I'm not saying doing 4%, but just something signaling to the market that we are willing to do something to try and protect the currency might be positive for the currency, and would remove some of the issues regarding the weaker currency impacting on inflation as well.
Yeah, one of the things that they'll look at is Brent crude, $78.16 or so against for a barrel, that is. That's a mark that in itself hasn't really moved too much, but it's floated up between 70 and 80 US dollars. Do you think that has a major inflationary impact for the Reserve Bank in this meeting per se?
Yeah, look, I mean, in terms of like the absolute dollar number, of course, it's between the 70 and 80, 72, just under 80 kind of level. We're trying to breach each of those levels, but not for much time. But the issue in South Africa is the Brent crude price in rand terms, which is a lot higher than that in historic terms, you know what I mean? So you go back and look at where we are in rand terms, and it's like, almost when Brent crude was at like, 100 plus, because of the fact that the rand has weakened so much in that interim period. So that's obviously an issue to be thinking about. The second part to it is that, the fear I have around the oil price is the situation in Iran. I think like someone like Donald Trump might look at it, and especially if he does badly in the midterm elections, as an easy, to pick up to his polling numbers to try and do more stuff against Iran. And they've really talked about that kind of stuff recently. You know what I mean? And if we do have a conflagration in the Middle East, we might just see oil prices well above 100 again.
Very quickly, your prediction then for the oil share today. We continue to see it in the red, down 1% for now. Does it continue downwards?
Look, I don't know. We're going to have quite a bit of time after the US opens to recover. Look, it could be a currency thing. The currency weakens because of other issues. We could see some of the things. But right now, I think the oil share has really been basically flattish to slightly negative for a little while, and I would expect it to stay the same for a little while longer.
Viv Govender, appreciate your time there. Viv Govender is from Rand Swiss. They're helping us to unpack those markets quite a lot there. 1% down for the oil share, and the Rand, as you're seeing, they're hovering in and around 15 Rand against the US dollar. That's where the buck stops this Monday afternoon. Stay sharp, stay safe. Nompumelelo Nzinga joining you right after this.